Hi guys, welcome back to my channel Capital Investments. My name is Salman Sheikh, and as the topic of the video suggests, triple calendar spread. So in this triple calendar spread, we use few strike prices that belonging to 3 calendar months. So here I have chosen September, October and November. You can also choose weekly 1, 2, 3 like 9 September, 16th and 23rd. But for this example, I have chosen 30th September, 28th October and 25th November. And all these three will be quite liquid for Nifty. Hence, I've chosen those. So this is the triple calendar spread, and this payoff graph might be quite confusing to you all, but don't worry about it. We should mainly focus on the blue line. It's like buying a straddle. So this is that kind of a graph, but this has an added level of safety. In this, your blue line actually stays quite on the top for a long time. So I'll just show you. Here I have sold a 16,500 PE in September, whereas I have bought in October, that is the middle month, 17,000 PE and CE. I have bought this PE and CE, and then I have sold a CE at the end of November at 17,500, and this is how the graph looks like. Now let's check. The max profit potential here is 35%. That is for September month, and that is very good PNL kind of a max profit. And the max loss that you can get is only 4%, whereas the estimated margin of the premium is around 34,000, and your probability of profit is 52%. So 52% probability of profit with 35% as the max profit and only 4% as the max drawdown, that is a very good risk to reward ratio, 1 is to 7.26. And your break evens at expiry are 17,031 and 17,748. Now definitely you would think that if I hold it till expiry I will occur a loss. Yes, if you hold it to the expiry, then there is a chance, there is a probability that it will expire worthless, but then you do not have to hold till expiry. And even when you hold till expiry, only the 16,500 P will expire, whereas you still have lots of theta decay left in 17,500 C as well as 17,000 put and call. Let's check out the payoff chart dynamics, and Nifty is around 3,000 17,340. If it goes to around 17,700 or so, you can see easily your PNL would be T plus 0 PNL would be 1.5 thousand, and similarly when it goes around 17,000 level, your PNL again would be 1.5 thousand. And if it makes a wild move, then this is the max profits that you will be getting. So this is a very good trade. Why we put this trade at what scenarios, I'll just show you. Here is the Nifty chart, and as you can see, the Nifty was rising so much and now it's been consolidating. So how many days will it consolidate? Maybe 1 or 2 days more, and then it's gonna burst somewhere upward or downward. And even if it does not burst upward or downward in terms of closing, but in intraday it will go somewhere like this, and this volatility will give you a very good opportunity to exit from the trade. Here is the India VIX, and you can see the India VIX is still at the 14 levels. I'll just show you 1 day chart of VIX. So VIX usually fluctuates between 10 to 20 levels, and here it took this low. It was lower for quite some time, and now it's been rising for the past couple of days due to consolidation in Nifty. The VIX has come down a little bit, but from the Nifty graph it can clearly be seen that now it will stay here, and in intraday there would be quite a lot of volatility we could see. So even when Nifty was consolidating here in this period, that is 30th July and June, from June to July, I'll just show you the VIX. So this is the VIX. See, this is from June, the VIX started falling, okay, and then by the end of July there was even spike in VIX, and this is the 30th July. So the VIX had quite a lot of fluctuations, and when it hit the low, it always rose. So during consolidation phase, there will be days when VIX will spike up very sharply, and hence this is the strategy that will help you. So when VIX spike up sharply, there will be an MTM swing, a huge swing, positive or negative direction, and in that swing you will probably earn more. So it may happen that it will go down up to 16,800 900 levels, and sometimes it may rise to 17,800 levels and then come back in the center again. So this may happen during consolidation phase. There is a fast and furious correction, and then it again comes back to its original place. Hence this strategy would work best. Also, you can sell weekly hedges at the end at these two extremes to reduce this bottom part further in case you want to hold it any longer and the theta decay kicks in. So I'll just show you what you can do to avoid a little bit of theta decay, you can just go here. You can just go ahead and sell 16,000 PE, which is far lower. You can just sell this, and you can see the graph. So this region is almost gone nil, and again 18,000 CE you can sell, because it's rare that it will go to 16,000 or 18,000 in September month. So you can see, so now even if you hold it till September, this graph is not going to give you a loss. This strategy will not give you a loss. In fact, even at the max loss, it's around 656 of positiveness, and it will only give you loss after it goes beyond 18,000, which is rare. And similarly, if it falls down, then you will have a party 11% profit. So this selling of hedges you can only do in case this chart is not moving much. So in case you feel that the theta is decaying, but the graph is not moving, and Nifty is still consolidating without any momentum in the upper or lower direction, then this you can sell it at the ends and get done with it. And so your estimated margin premium would become 1,20,000. So if you have around 1.5 lakhs of capital, you can deploy this trade. I'll just show you how the IV will change and the PNL. So if the IV rises by 10 to 15%, here you can see there isn't much of an impact on your PNL, and if it falls by 10 to 15%, even then you can see that in the center that will be a small loss because you have bought from the center. You just see the decay for the next 15 days, and this is how it will decay. So you will be more protected from the negative side. So in case market starts shooting up, we can start bringing this sold legs of 16,500 and 16,000 PE further. So say 16,500 and 16,000, you can move it further to 17,000. I'll just show you what will happen if you move this to 17,000. See, this sold PE is went here. So if you just move this leg here, your range from the upper end increases, and definitely it will hit a roadblock on 18,000, and I'm pretty sure about it. So it won't fall much below 17,000, neither it will rise much below 18,000, but it will keep on fluctuating here. But on the negative side, their correction may be fast and furious, and hence it had a huge lower end. So that's it about this triple calendar spread. There are many variations. This is one of the variations. Rest of the variations we'll cover in our future videos. Let's start the post-market report. So as you could see that Nifty has been consolidating since the past 3 days. You could see these 3 candles, and with a very small range it's been consolidating, and it's slightly now negative bias. So we are at quite a comfortable place where Nifty doesn't move more than 1%. So here it is again, it's 0.05% in negative, and even SGX Nifty surprisingly hasn't moved much today, so it's 0.03%. Whereas Bank Nifty also is 0.82%. So consolidation is the name of the game for major indices of the Indian economy. So Nifty and Bank Nifty are consolidating, with the VIX also falling down. So there is a 3.26% fall in VIX. What happened with the Dow Jones? So Dow Jones actually fell down a little bit, and yet respecting its long-term bottommost support line. So here it is. And because it fell down, so VIX rose 2.76%. So here you can see that there is nothing much to discuss about the charts, as the markets did not make much more of a movement. And today I also did not get to trade any of the stocks because none of my stocks made much of a movement. Let's check the option chain analysis. So this week will expire on Thursday 9 September, and Friday we'll have a trading holiday. Here you can see that the 17,400 put has been unwound. So that is the negative biasness. You could see the put writers confidence is decreasing and the call writers confidence is increasing, and that was heavy call writing at 17,400. So put is standing at 17,300, and there was huge volume addition, but see calls were also being added at 17,300. Let's check how the data changed in the month end. In the month end, we could see that the calls in the money has been unwound slightly, and there was significant put addition overall. Maybe in this expiry there will be slight fall, but overall in the monthly trend it's quite positive, and we might have the result season maybe in the coming month or next month, next to next month. So that's where we will also see lots of market movement. Here is the Bank Nifty chart, and we can see in the money calls are unwound, whereas there is still calls standing at around 36,800 level as well as 37,000 levels. Although the call writing is minimal, and this far out of the money calls have been unwound because of the premium decay, and people have unwound so many calls here, but the call writing, you see, there isn't much of a volume in call writing. In the open interest addition is not much over here, so call is already there, but there is not much addition. Put was there already, but the addition is still we are seeing near the money. So there is slight positiveness building up in Bank Nifty. 30th September here, calls are getting built up, and the call writing was very much today. Here as you can see, at the money puts have been written near the money, but it's been very small volume, whereas the volumes of the open interest of 37,000 as well as 37,500 was very high. So there's a significant call writing being done over here, although the put is standing tall at 35,000. So 35,000 is, I think, the rock bottom. It will not go below this. Even if we see bad news, loan defaults, anything like that, we still see 35,000 to be a strong support. So there wasn't much of a movement as of today. Today is Wednesday, although Wednesday markets and Monday markets are hugely volatile, and we have seen in the past that Nifty has been falling a lot, but today it did not fall. But we'll have to be cautious of Thursday. There is a quite of negative biasness built on Nifty, and we could see probably 100-point fall in Nifty on Thursday. So let's be prepared for it. So that's it, guys, from my side. Thank you so much for watching. If you like the video, please do hit the like button. If you dislike the video, please do hit the dislike button. Just do it twice to be doubly sure. And if you're a regular watcher of my content, please do subscribe to my channel and hit the bell icon. Share it with your friends so that they also can get options trading and stock market knowledge. See you in next video. Bye bye. My name is Salman Sheikh. Capital Investments is the name of my company. If you're new to this channel, then please do visit my channel and watch the videos. I have created very good videos for you. If you're a basic options trader and you're learning options trading, do check out my initial 4 videos. And in case you are advanced and have been following me regularly, please do check out my daily stock options trade and daily analysis of post-market report.